from the heart of where innovation, money, and power collide. In Silicon Valley and beyond, this is Bloomberg Technology with Emily Chang.
I'm Caroline Hyde in New York, in for Emily Chang, and this is Bloomberg Technology coming up in the next hour. Apple out with the latest iPhone 13 featuring ramped up 5G capabilities, along with camera and processor enhancements. We'll cover the latest from the much-anticipated Cupertino event, as well as what other products saw upgrades. Plus, California heads to the polls to decide whether the current governor, Gavin Newsom, will remain in the seat. This marking only the second gubernatorial recall election in the state's history. We're taking a look at the future for Newsom if his job is at risk. And SoftBank is betting big on tech in Latin America. The company is adding another $3 billion for investments in the region, with plans to invest in everything from early-stage startups to public companies. We'll have an exclusive interview with SoftBank International Group CEO Marcelo Claure. All that in just a moment. But first, well, let's get a look at the markets. Who other than Kriti Gupta with the latest?
Well, Caroline, a risk-off day in the stock market. And you would think that on a risk-off day, especially coming off of a CPI print that came softer than expected, tech would get a little bit of a bid. But even as we saw some money go into those havens, tech, it was in no part of the rally. Instead, you saw a very broad sell-off in the stock market. Where you did see money go into was the Treasury market. You saw yields drop as much as 6 basis points, ending lower by about 4 basis points on the day. I want to go really straight to the micro story, though, because one of the biggest contributors to the S&P 500 move was Apple, of course. I want to zoom out, look at the big picture first, and show you that technicals are in play. What happens to Apple tends to move the S&P 500 broadly, and right now, Apple, the technicals suggest that it could potentially be set up for a drop. When you're looking at the RSI, simply that bid for Apple extremely strong right now. So what happened intraday, especially in light of that product review, that product launch, I should say? Apple actually dropped lower on the day by more than its average. Average launches for Apple end up with a 0.8% decline on the day for the company. Now, you saw a 0.96% decline, and not only did Apple take down with it some of those other big tech names, it also took down its entire supply chain in the red, Caroline. Maybe, though, it can recoup tomorrow. 6 out of the last 7 days in the red. Maybe tomorrow's the buy the dip day.
Maybe, just maybe, but it's eroded about 6% of its value from September the 7th. So clearly lost a little bit there for the $2 trillion company. Let's get straight to it. Kriti set us up perfectly. Apple unveiling a range of new products at their much anticipated and all virtual California event. Now, we got everything from upgraded iPads, the watch, to a new iPhone 13. Now, the announcements may have excited Apple fans, but not so much investors, as Kriti was just mentioning. Shares ending the day slightly down. Let's dig into all of this. Julie Asker is with us, Forrester Research Vice President and Principal Analyst, as well as our very own Mark Gurman, who covers all things Apple for Bloomberg News. Mark, first and foremost, I mean, everything that was announced you were anticipating. Any surprises?
Yeah, no surprises today. I think the most interesting story coming out of today is the Apple Watch. You've really never heard this from Apple before. When it was time to talk about the watch, they said, well, this will be available later this fall. Well, what does later this fall mean? Well, that means it's not going to be this month. It's not going to be this next month, and it probably won't even be November. These new Apple Watches with that larger display are delayed because of serious production and development problems they had late in the game. Hopefully they're able to get them out before end of year. I don't think they would have said fall if they weren't able to, but this is an interesting and almost unprecedented delay, similar to what we saw with the original Apple Watch, but unprecedented since then.
Is November even technically fall? I'd debate it. Julie, what do you make of the lineup and indeed some of the supply chain issues that are there or not? It was interesting. We had an analyst on in earlier hours saying actually the fact that the price points haven't moved that much sort of is showing they're managing to contain the supply chain issues over at Apple. What do you make of it?
Well, I think they could either be containing supply chain issues or, perhaps, cutting back on their profit to deliver at price points that consumers want. But certainly, I think Apple delivered a solid lineup. At the end of the day, right, most of us are still at home. Most of us are looking to do more things at home. Kids are still at home learning in some cases. We're getting healthcare at home. We're working at home. We're being entertained at home. We're working out at home. And all of this generates more demand, not only for the devices, but for the, the array of services that they're offering.
Interesting. I mean, Mark, to that end, did it were you impressed in any way by the lineup? I mean, for you, it's all old news. You managed to break it all ahead of time. But is this enough of innovation being shown by Apple? I saw so many fun memes about basically it all looked exactly the same. Does it matter much that we're only seeing slight improvements on camera and the like for the iPhone, for example?
I mean, this is nothing new, right? Every time they come out with a redesigned iPhone, the follow-up device always has a very small update or a very similar design. So this is not surprising. Is it good enough? Yes, but I think Apple's at risk in a couple of years falling behind in the smartphone game if they don't catch up. I think foldables is going to be an extraordinarily strong phone category. Samsung is really pushing those hard. Apple is going to need to come out with a competitor on the foldable side. The iPad mini, it's an incredible upgrade. If you're an iPad mini fan, this is unbelievable. 5G, bigger screen, smaller bezels, Touch ID in the edges of the device. I think that's awesome. I personally, if I wasn't going to get the 13 Pro Max, I would get this iPad mini. I think it's unbelievable. I see we're showing it on the screen right now. However, that's not going to move the needle for Apple's revenues. What's going to move the needle is people continuing to upgrade to the new iPhones. And these new carrier deals, these new financing plans make it easier than ever. I think the one challenge Apple has is consumer education about how it's very possible to get a new iPhone every year, putting that $1,000 in Apple's bank account without taking that much money or any money out of your personal bank account. I'll give you an example. I have the iPhone 12 Pro Max right now. I'm going to be able to get the 13 Pro Max and order it this Friday without paying anything additional because of how good the trade-in deals are at this point.
Ah, there you are, the education for the masses. Judy, what's interesting is also how much we're seeing the impact of Apple. Yes, perhaps it's not completely revelatory this time, but the standard that they set and the impact it has on competitors. We saw, for example, the share price dip a little bit for the likes of Peloton today. How much of a focus is the health area? How much of a bite out of market share can Apple continue to take, and is it enough?
Well, I think there's a couple of things. So I agree with everything that Mark said. And I believe that Apple has a very strong and a very loyal customer base. And the more they create services, the more they sell, the more locked into their ecosystem that I am. Right? I don't believe we're going to see dedicated or loyal iPhone owners switch over to a Samsung or switch over to get a different device just because it folds, because I'm already too locked into the system with like my watch and my tablet and all the services that I provide. The other thing is I think, it's very easy to focus on the hardware and the camera and how big the display is, because that's what consumers understand and that's what sells. It's hard to explain all the subtleties and all the things that are under the surface, all the things that machine learning and AI do to make us take phenomenal photos, never misspell a word, surface our favorite memories from 5 years ago, or the things that are hard to do. But I do agree with you, right? I think even when we talk about the camera, the focus on is what's going to sell for the holiday season, which is great photos. But what we're really also talking about is the computer vision that these cameras enable. So think about things like, healthcare, augmented reality, more virtual reality, and just a lot more use cases as we go forward, because this isn't just going to be about cameras and taking awesome photos. This is going to be about how this device enables me to do so much more over time in so many different facets of my life.
Yeah. Julie, at the moment, also, the story about buying into Apple is so much more than this one product unveil. It's about the news that we've had in the latest week or so, the fact that they have had a security issue with its messaging system, the fact that they have had that Epic ruling that they say is in their favor, but seems to be upending somewhat the app economy for them. Are you positive, as positive as you were, about Apple and its overall business model as it stands?
So yeah, for two reasons. I think one, every company has not every company, most companies have had security breaches. It's not a question of if, and it's a question of when. And I think what consumers care about is how that company handles the breach. And we know that Apple is one of the most trusted technology brands on the West Coast. So that's one thing. And I think the thing too is, I think despite the Epic ruling, I think Apple does have reasons to be optimistic about the future within the App Store, because we can never underestimate consumers' desire for convenience and privacy and security and the things that Apple offers. If we think about how little friction there is for me to go into the App Store and make a purchase by double-clicking the side of my phone and showing my face, it's easy compared to clicking on a link, going to a website, creating yet a new account with some independent developer that I don't know and I may not trust. What's different for them certainly is like the Netflixes, the large media companies of the world, like the New York Times, the Wall Street Journals. It's fair for them to say, I've had these customers for a long time. It's an and that they're on the iOS platform. It's not the only place I reach them. And it's going to be easier for them. I mean, certainly it's always been, and it will continue to be easy for them to get customers to sign up outside of the Apple ecosystem and away from the 30% toll. But I think independent developers are still going to depend on that system, even if they have other options.
Julie Usk, always great to get your perspective. Forrester Research Vice President and Principal Analyst, as well as always great with the scoots. Bloomberg Technologies, Mark Gurman, thank you both for your time there and insights. Meanwhile, coming up, SEC Chair Gary Gensler drawing criticism as he pledges to approve dozens of new rules on crypto to meme stocks. We'll have the latest in Washington, D.C. That's next. This is Bloomberg.
Is it your view that stablecoins themselves can be securities?
I think that, Senator, they may well be securities.
So the SEC chair, that's Gary Gensler, testifying in front of the Senate Banking Committee and spoke about his busy agenda, whether it be crypto, SPACs, order flows, you name it. Take a listen.
The special purpose acquisition companies, these blank check companies, the risk are to investors and the disclosure to the investors. I've asked staff to serve up recommendations that we could consider as a commission. So we're looking at greater disclosures and also looking at if there's inherent conflicts along the way. And then again, try to put this out to notice and comment and rulemaking. Some of these tokens have been deemed to be commodities. Many of them are securities. I'm not negative or a minimalist about crypto. I just think it would be best if it's inside the investor protection regime that Congress laid out. And I think the inherent conflicts of payment for order flow and rebates on the stock exchanges, both, may make our markets less efficient. And this is important for capital formation, and it's important for the retail investors.
Let's get more insight on what was said. Bloomberg's SEC reporter Ben Bain is with us in Washington, and such an ambitious agenda coming from Gary Gensler. What do we learn in terms of the way he wants to execute it?
Well, I think we learned a little bit about where he sees the priority areas. He delved a little bit deeper, perhaps, into just kind of how he looks across, for example, the crypto space, and basically says that most of the tokens that are out there, in his view, are securities, which would mean they would fall under the SEC's regulation. But more than anything else, I think today what we learned really was that Republicans, at least in the Senate and on this very important Senate Banking Committee, are a little bit skeptical of some of the plans that Chair Gensler has laid out. This is really the first time that he's gone before the Senate, ultimately the body that confirmed him for this job. And he really had to answer to the other political party about how he plans to go ahead with things like requiring more disclosures on climate change, from how companies may be impacted by climate change, things like corporate diversity. A lot of the issues that Democrats, and particularly the Biden administration, care very much about, and he has said he wants to make a priority at the SEC. Republicans on this panel were very skeptical. They basically had the message that they wanted Chair Gensler to focus more on kind of the bread and butter SEC issues of stock markets and bond markets.
I mean, of course, we know that sort of the top Republican over there on the banking committee, Pat Toomey, has been very much a proponent of crypto, for example, and pushing back against regulation by enforcement, as he called it, that Gary Gensler has done thus far, of course, referencing the Wells notice over at Coinbase. But I'm interested in, Jennifer Schultz just joined us. She's over at the Cato Institute. She came to fame. She's been doing great work for many time, but she was on the GameStop hearing back in February as sort of expert witness. She was saying there is this fine line for the SEC to not stifle innovation. Is that what the Republicans are really worrying about, or is it more sort of a capitalist tendency?
So I think it's a little bit of both. I mean, a lot of what we heard from Republicans today really were in line with what industry lobbyists and financial trade groups in Washington have been saying really for the past several months. And also the crypto industry has been saying, in particular, really even predating Chair Gensler. The idea essentially is that and you heard it from Senator Toomey today, is that if you come in with too heavy of a hand, then innovation, particularly in the crypto markets, is going to leave the United States, go abroad, or some of these projects will never take off. And the Republicans were saying today that that would have a negative impact on consumers and really the economy more broadly. What we heard from Democrats, in particular, senators like Warner, for example, he was really raising issues about how much some of these markets are not really overseen to the extent that perhaps other ones are. And we heard really just a big divide in terms of how this burgeoning crypto market, should be overseen by Washington today, I think.
What about the protection for the retail investor, the consumer? I mean, if the Republicans are arguing that it's better for the consumer to have innovation here, but also on the flip side, there's this ongoing narrative, particularly when we saw the meme stock frenzy, that there's a gamification, particularly when it comes to stock market trading and options and the like. Do you think that people heard what they wanted to in terms of ensuring enough transparency is shone upon what they, and if anyway, the SEC's role is about education too?
Yeah, I mean, I think probably both sides heard what they wanted to today, in the sense that I think Republicans, heard, Chair Gensler say that he wasn't against the idea of innovation, that he wasn't opposed to new technologies, and that probably, sat well with them, even as they're a little bit skeptical of some of the plans he has. And I think Democrats, probably took away, exactly what they wanted to hear. I mean, a lot of the focus of this new SEC chair, and now he's been there for a few months, has really dovetailed with some of the issues that Democrats, particularly, in the Senate, have raised as important issues in the markets. You talked about, the GameStop phenomenon and some of the meme stocks at the beginning, of this year. And Chair Gensler also today said that, within the next short period of time, the SEC is going to produce a report basically explaining to the public, what happened, in that. And also he said he plans to move ahead and look at some of the inner workings of the stock market. So I think both Republicans and Democrats came away with a little bit of a more clear picture about how the SEC plans to protect retail investors. Now, I think we're going to see this debate continue to play out as he moves ahead with his, as you mentioned, pretty ambitious agenda, some 4 dozen plus rulemakings that are on tap here.
Well, plenty more for you to chew on. I know you've had plenty of transparency from him with your own interviews with Gary Gensler. Of course, Bloomberg News SEC reporter Ben Bain in Washington. Great to have some time with you as always. Meanwhile, let's talk valuations right now, because the Australian design and collaboration platform, Canva, it's hit a $40 billion valuation after the fresh funding round. Sydney-based company raised $200 million from backers including T. Rowe Price, Franklin Templeton, and Bessemer Ventures. The new valuation makes it one of the world's most valuable private software companies. What's extraordinary is how much that valuation has climbed in the last few months since last it raised money. Meanwhile, coming up, Californians are deciding the fate of Governor Gavin Newsom in an historic vote on the U.S. West Coast. We'll discuss what's at stake next. Meantime, let's take a look at Comcast. Finishing the day down, more than 7% internet subscriber additions slowed at the end of August as COVID continued to impact the company's traditional business patterns. Comcast CFO says, look, third quarter subscriber gains are also unlikely to exceed numbers from the same period prior to the pandemic. So all about the important 2019 comparison too. This is Bloomberg. So in the past few days, both the US president and vice president have joined the Democrat at voter rallies. That is, of course, Gavin Newsom, as we see a second gubernatorial race ever election in the state's history. This is a recall race. So clearly we're seeing the Democrats in power come out in support of Gavin Newsom as he runs to fight off what is a real question mark to his future power over in California. Let's join Margaret O'Meara. She's a professor at the University of Washington. Wonderful to spend some time with you. And just put this into historical perspective for me. We have seen challenges such as this, but just never gained this much traction. And indeed now, I mean, potentially an unseating?
Yeah, I mean, the recall has been on part of the California Constitution for over a century. Every governor in the last 3 decades has had some recall attempts. Almost all of them have not gotten very far, not even gotten enough of the rather minimal amount of signatures one has to get it on the ballot. The one that actually succeeded was in 2003, when a Democrat, Gray Davis, was recalled in favor of Arnold Schwarzenegger, someone who was already pretty recognizable, who then became governor. So this was not supposed to go this way for Gavin Newsom.
Not meant to go this way. And of course, there are 2 questions asked in terms of survey results. And I think about 39% are in favor of the recall and 60% are against it. But they're being asked, should Gavin Newsom remain governor? If not, who should replace him? I mean, what are we knowing in terms of the support factors that are coming out for Gavin Newsom? Who supports him? I know some big Silicon Valley backers support him. Eric Schmidt, Reed Hastings. Why do they support him?
Yeah, well, it's interesting. There's been Silicon Valley has been on both sides of this. And look, California is an overwhelmingly Democratic state, more so than it was in 2003 when Schwarzenegger won. It has been but I think that Silicon Valley now leans heavily Democrat. That's where the Silicon Valley moguls put their money when it comes to election time. But there also has been a lot of frustration with, during the pandemic, especially economic shutdowns, with the broader state of not only California, but particularly urban California and the Bay Area, homelessness, housing crises, the question of we're paying all these taxes and where are they going? And there have been some very vocal people on both sides, but particularly on the pro-recall side, that helped this whole campaign gain momentum in the first place.
Chamath, of course, being one of them, who's many feel that he took to the stage and moved things, David Sachs and Larry Ellison. The irony is that you say is, how much political influence do big technology, money, billionaires have over basically what is meant to be, a democratic election?
Well, it's interesting. Silicon Valley has always given money, sometimes very quietly. Silicon Valley used to lean strongly Republican back in the day. David Packard, co-founder of Hewlett-Packard, was a very important Republican donor and kingmaker, but was not someone going out in public at rallies, or he didn't have his own podcast back then, sort of giving political opinions.
He wasn't on Twitter, really?
He wasn't on Twitter, believe it or not. And so this is really interesting. In 2003, we didn't have Twitter. We didn't have podcasts. And we also didn't have Silicon Valley leaders being so visible in and of themselves. They were just CEOs of companies and were not, with a few exceptions, not all that famous on their own. And now there's both money being given, but I think even more interestingly, they're weighing in. They're complaining about Gavin Newsom. And then I think what really turned the tide is when it became less about, hey, let's get rid of Gavin Newsom, and then a realization, particularly among, again, a strongly Democratic leaning executive class in Silicon Valley, that what the alternative would be. If you get rid of Gavin Newsom, it isn't as though the lieutenant governor gets to ascend to the governorship, which happens in some other states that have the recall. And instead, it's whoever is the largest vote getter of the other candidates.
Margaret, really fascinating. Got to follow your work. Really great insight and context there. Margaret O'Meara, of course, the University of Washington professor, giving us the context that's necessary over in California. Coming up, investing in Latin America, we talk to the CEO of the SoftBank International Group, Marcelo Claure, to discuss how it's taking advantage of the region's growing tech investment popularity. That's next. This is Bloomberg.
I think it's still quite tight through the end of this year and into the first half of next year. But a lot of capacity is coming online in 2022, and I think we'll start to see things get better.
Lisa Su there, of course. This is Bloomberg Technology. I'm Caroline Hyde, AMD CEO, speaking at the Global Semiconductor Alliance conference earlier today. Her comments on, of course, that all-important chip crunch came as the CFO of T-Mobile warned investors of possible chip shortages on Samsung phones. Meanwhile, let's find out how the chip makers fared on the markets today. Bloomberg's Kriti Gupta has all the market breakdown. Kriti.
Well, Caroline, a risk-off day in the markets, but semiconductors actually did fairly well relative to all the other sectors. I really like to compare them to some of the other tech subsectors. So your Chinese ADRs, as well as your NASDAQ biotech, because it really is that tech bundle trade we want to keep an eye on. Semiconductors actually ending flat on the day for a risk-off day where tech and stocks broadly actually took a pretty big hit today. Semiconductors fared pretty well, and actually for the majority of the intraday session, they were actually higher on the day. So that's good news. Once again, really reiterating that view that there there will constantly be that demand for semiconductors and potentially that growth for those semiconductor companies. I want to zoom out, though, and talk about tech broadly relative to another sector we like to look at, and those are small caps, that economically sensitive stock compared to that tech haven trade, which sometimes move together as kind of a momentum play. And that's kind of what you're seeing. You can see them kind of mirroring each other and recently starting to pick back up, tech and small caps gaining together. Of course, today they declined, but in the broad sense, that's something you really want to watch. I want to end, Caroline, with a thought on crypto, because I did say it was a risk-off day. And broadly, when you see a risk-off day in the stock market, you tend to see that in cryptocurrencies as well as this kind of risk sentiment indicator. Today, that was not the case. You saw the Bloomberg Galaxy crypto index up over 2%, almost 3%. And now you've actually had some of the prices for Bitcoin and Ethereum actually flip to restarting the Asian trading section. So you see a little bit pressure now, but in the intraday session, at least during the U.S., positive, green on the screen. So let's see if that continues tomorrow.
Rudy, thank you for giving us a snapshot of what happened on the markets. Meanwhile, let's go for a longer-term bet now. SoftBank is putting a big chunk of money towards Latin America's tech industry, adding $3 billion for investments as it quickly gains popularity among foreign and venture capitalists. Joining us now for an exclusive interview, I'm very pleased to welcome SoftBank International CEO Marcelo Claure. Great to have some time with you, Marcelo. And this is SoftBank Latin America Fund 2. That's what, now $8 billion you've put to work in this area. What has so surprised you about the region?
So first, thanks for having me here. It's a bit strange to do a live interview.
I know, so nice.
We've all gotten used to Zoom. Latin America is an exciting journey for SoftBank, and it started when I was living in Japan with Masa, and we were investing to the tune of $1 billion a week on our SoftBank Vision Fund. And my big frustration was never seeing Latin American entrepreneurs. So we decided to go and explore and see what was going on. And our hypothesis was that, first of all, it's a market that needs disruption because pretty much everything doesn't work well, is broken, so technology can fix a lot of things. And our theory was that there was a high quality of entrepreneurs, high quality of companies, but the problem was lack of capital. And when we landed in Latin America in 2019, the total venture technologies were in the tune of $1.5 billion. So we decided to launch a $5 billion tech fund, which was the first one. And we thought it was going to take us 5 years to deploy capital, but with first 2 years we invested to the tune of $2.6 billion, and the third year alone we're going to invest $5 billion. So this is why we needed to create fund number 2. What has surprised us the most, the quality of entrepreneurs in Latin America is as good as any part of the world. The business models that have been deployed in China, in India, in the US are starting to boom in Latin America. So I think it gives us a competitive edge that we have seen what is the art of the possible in other markets, and now we see those high-quality entrepreneurs basically launching these great companies. And so far we have deployed about, as of last quarter, about $3.5 billion in capital. The returns have been exceptional. It's a 105% IRR in local currency and a 90% IRR on a gross basis in US dollars. So it makes it one of the best performing funds in SoftBank and definitely among a lot of the venture funds. So based on that, we've seen that the need for venture capitals, or as we like to call it, vision capital, is needed in Latin America. And this is why we've decided with Masa to basically double down in the region just to fulfill the investment needs for this year. This year we plan to deploy $5 billion in Latin America.
Sort of build it and they will come, though, because you've done it, and now a lot of other people are putting money to work in the area. Do you think valuations are as appetizing as they always were?
No, I think valuations is always a hot topic, and the type of growth that we're seeing in our Latin American portfolio companies is magnificent, is great. So therefore, we believe that valuations are right on or where they should be, and you're seeing a lot of growth. You're seeing Latin American companies IPO in the US. We had one of our portfolio companies, Vitex, IPO a couple of weeks back. They're worth $5 billion today. And my prediction is next year will be the most important year in Latin American histories of IPOs. We expect a lot of IPO activity from Latin American technology companies in US markets next year.
How long do you remain committed to the companies? Because I know that this fund will allow you to be private and public purchasing. Vitex, now is that another couple of years that you remain with the business? Do you have any sort of guidance on that?
I mean, the way we like to think is our Latin American fund is different because we are a single LP, right? We're SoftBank, so therefore we have no rules in terms of how long should we hold an investment, how small an investment should be, private, public, and so on. So the combination of close to 50 companies we have invested, we have public companies, we have private companies, we have seed investment, we have early stage, we have growth, we have advanced, we have digital transformation. We made a large investment into Televisa-Univision merger as we plan to launch an over-the-top to compete with Netflix just in the speaking Spanish language. So that's the beauty of our Latin American fund, and we're able to invest in anything related to technology. So, every time we have a public company, we look at it like any other private investment, and we look at what is the potential growth of that company in terms of, growth of their business and growth of potential valuation, and we look at it and we'll hold it. SoftBank is well known for being patient capital, so we're good in terms of holding investments for as long as we believe they're going to break or minimum, 30 to 35% IRR.
What type of exits? Does it matter to you whether it's an IPO or whether it's a SPAC?
It doesn't. I mean, we also launched our SPAC in Latin America, and we are carefully selecting the potential merged target. So it really doesn't matter. I mean, obviously, we want to make sure that the company is going to be a great company before they go public, and we want to make sure they're ready for the public market. And so far, so good. I mean, we've had a couple of IPOs, and I think a great success story is, we invested in a public bank in Brazil, Banco Inter, which, we invested at a valuation of $2 billion when it was a small digital bank. And fast forward, today they're a bank, they're the leading insurance marketplace, and they're the first, I would say probably one of the most advanced banks in the world in terms of that now it's a marketplace of e-commerce. So people come in because they're their bank, but then they immediately link to different e-commerce sites, and the transaction gets financed on the spot. So while the whole world is raving about buy now, pay later, that's been going in Brazil for 30 years. And so it's great. I mean, and today Banco Inter, if I'm not mistaken, the market cap is over $10 billion. And a couple of years ago, it was $2 billion. And we've seen an incredible growth, not only in the number of digital customers they attract, but also on the expansion of products. They recently bought a fintech in the US. So it's fascinating to see a Brazilian bank come in to serve Brazilian customers in the US. So as you can see, by my passion and my excitement, I am in love with everything that's going on in Latin America in the tech ecosystem.
What about closer to home here in the US? And WeWork, of course, a company you've been very much intimately acquainted with, and a company that's looking to exit via SPAC. And are we understanding that's now going to be in the Q4? Is it going to be October? What do you think of that process at the moment?
I think we're relatively close to that. I mean, WeWork is a fascinating story of a company that I became the executive chairman exactly 2 years ago. And I'm getting ready to do a town hall tomorrow morning with all the WeWork employees. And I started looking at, what the press thought of WeWork 2 years ago, what the employees, what the landlords, what the customers, and what a remarkable change that has been. I mean, WeWork today is, a couple of months ago, we had higher sales. Now, prior to the pandemic, we had our highest net sales ever in the history of the company. And I think that the value proposition, the vision that was set up to provide a flexible workspace, a hybrid workspace, now is more important than ever with the uncertainty of return to work that, nobody really knows what's going to happen to the future of work. But what we do know is that it's going to be a different type of work that's the one we're used to. And flexibility will be the most important part that employees are looking for. Flexibility of how many days I come to work, flexibility of where do I go to work. And I'll tell you, one of my biggest satisfactions in WeWork has been, we call it the Uberization of real estate. We basically grab our spaces, and in the old times you had to buy a car. Now you basically ride an Uber for a ride. Yeah. And you can go to WeWork today and you can rent a desk or a conference room by the hour at any of our close to 1,000 buildings all over the world. And it's amazing the amount of adoption that you have, that people are coming in by the hour, by the day, by the week. And it's been fascinating. And we made some bold projections, and the projections are, for sure, within the next 12 months, WeWork is going to be a profitable company. Yeah. And go back and to ever think of that 2 years ago when we had multi-billion dollars of losses, it's great. And I'm proud of Sandeep, the CEO that I hired. And I'm proud of the team because this is a remarkable turnaround that's in the making.
I mean, you're known as a turnaround king. That was proved with Sprint, with building businesses as well, with your previous entrepreneurship. You're also known as a deal maker, having seen how Sprint and T-Mobile worked. NVIDIA ARM, is that a deal that's going to go through, do you think, from your perspective?
I mean, obviously I can't comment. What I know is that ARM is an incredible company. And ARM, the value of ARM is very important as it occupies, I would say, one of the most important parts as you build a mobile phone that we carry, or anything that's mobile. So I think it's just a great company. And as you know, as I did the Sprint and T-Mobile merger, one of the most important things to never comment until the deal is done. But we have a lot of faith that this is just such a great transaction. So hopefully it'll get done. And if it doesn't, ARM has a bright future ahead.
Marcelo, so much more I want to talk about. The fact that your career was born with soccer, and I know that that's a passion of yours that's still going on in terms of investment as well. SoftBank International CEO Marcelo Claure, wish we had more time. But meanwhile, coming up, we talked there about Latin America, the future investment. Let's talk about the future of AI in a moment. We're going to be hearing from the founder of Sinovation on whether it's true that artificial intelligence will take away many jobs, even mine. Apparently, they're already doing it over in China. Any sector safe from being replaced by a machine? We'll ask. This is Bloomberg. Intuit, the maker of TurboTax, QuickBooks software, you'll know it if you're a small company. Well, it's agreed to buy email marketing firm MailChimp for $12 billion in cash and stock. Now, despite recent regulatory crackdowns, Intuit CEO, that's Sasan Goodarzi, says he's not worried.
They've been great at helping small businesses grow their business. We've been great at helping small businesses run their business. And now we're going to put those two things together, which fundamentally creates magic. And we believe that the regulators are going to see the benefit for customers here, and we feel confident about the future.
Meanwhile, the planned transaction marks Intuit's largest deal to date after paying, well, just over $7 billion last year for Credit Karma. Now, the acceleration of AI, it's exciting to the tech world, but many fear it, as the image of robots taking over the world still remain embedded in their minds. Kai-Fu Lee is co-author of the new book AI 2041, 10 Visions for Our Future, and founder of Sinovation. Spoke with Emily Chang to discuss how AI will transform society in the next few decades.
I think technology changes a lot in 20 years. I think about 20 years ago, how we would feel today is so fantastical and amazing if we could describe our lives today to the version of us 20 years ago.
Now, there are two extreme visions for how AI will change our lives, the dystopian versus the utopian, the Terminator versus the Jetsons versus Black Mirror. Where do you fall on that spectrum?
I am an optimist, but I acknowledge both sides are possible. Although I would say dystopian is not one where AI takes over and we're all being manipulated by it. I don't think that's going to happen. I think AI is a neutral technology. It can be used positively or negatively. It's particularly powerful because it does a lot of things that people do, so that we'll have to see how it works out.
You have a nuanced view on jobs, and one of the more extreme views is that AI is going to take all the jobs away. How many jobs will exist in 2041 compared to how many jobs there are today?
I think most of the jobs as we know it today will be gone, and AI will be doing them for us. But there will be new jobs. Just as any technology revolution, electricity and internet, small ones like the automatic elevator and Uber, they've all taken jobs and put jobs back. So that is my expectation. We have to think about jobs a little differently because AI is best at doing routine jobs. So those are going to be gone. But AI doesn't have a lot of qualities we do, such as creativity and compassion and working with people and gaining trust and strategic thinking. So more of us will get to do more exciting jobs as AI liberates us from having to do routine jobs.
So selfishly, I have to ask, since one of your companies was working on an AI news anchor, will my job exist in 20 years?
Your job will exist because you're very good at it, but many other journalist jobs, as well as interviewer anchor jobs, will be displaced because AI will become increasingly good at asking questions, answering them, and creating excitement and interest. And we're seeing great progress in natural language today. And we're seeing deepfakes as a negative use, but it can also be used positively to project an engaging personality, which may be emulating someone real like yourself, or completely new and virtual.
I guess then the question is, why shouldn't we be terrified of that? I mean, it sounds scary if a computer can trick you into thinking you're an actual person.
I think there needs to be a clear acknowledgement when there is a computer, so there's no effort to deceive people for sure. But also, I think if AI is able to do the job of an entry-level journalist, writing about a quarterly report or a sporting event, that's so much work that good journalists don't have to do, so that journalists can learn and grow and compete to become a columnist or a great interviewer, and don't have to do the relative routine part of journalism. And also AI can be a tool that will find interesting topics and opposing views and help craft messaging and ensure there are no mistakes. So it is a symbiosis, although really only people who are naturally good and passionate and work hard will get to really shine in this environment. One cannot just expect to be a routine journalist or someone who's mediocre. One really has to strive to be very good.
If most of the jobs that exist today won't exist, let's talk about quantity. Will there be enough jobs to go around? Will people need to work to survive?
So first, I think there will be a lot of new jobs created by AI. There will be people who get to repair robots, write AI algorithms. There will be many people who, for a while anyway, get to label data and collect data and clean data, because AI needs to be trained on data, and more such jobs will come and go. But I think the largest group of number of jobs that will be available will be in the service industry, where there is a particular warmth and human connection that's created that AI can try to emulate, but will not do a good job. But you're right. I'm not sure there is enough jobs to fill 40, 50 hours for everyone meaningfully in the world.
What will an entry-level job then in 2041 look like?
That is a very good and tricky issue, because if all the routine entry-level jobs are hollowed out and taken by AI, how does someone get the practice to be a New York Times columnist or a Bloomberg anchor or scientist or a great accountant or lawyer? So this is one of the stories in the book AI 2041 called The Job Savior. We imagine that there would be a new profession that's called job reallocator. That is when a company lays off an entire department because AI is doing the work. This job reallocator comes over, and the government offers universal basic income, but that's not enough. There needs to be specific training and also help psychologically for people to get over the meaning of their life changing from their job to either a new job or something different, and then customizing the training and then the reassignment of a job for each person. And it may actually be necessary to offer some people jobs that are virtual, that they think are real, but maybe are not, or maybe it's borderline real, non-real, so as to give them the sense that they're contributing, but actually they're learning and growing. And then there's an entry-level job, but the job itself is vacuous. It's merely a practice for them to grow.
Founder of Innovation, speaking with Bloomberg's Emily Chang there, all things AI. Check out his new book, AI 2041, 10 Visions for Our Future. Meanwhile, coming up, first it was Virgin Galactic, then it's Blue Origin, and now, of course, it's a trifecta. Elon Musk's turn to send civilians into space. We'll have an update on the 3-day trip awaiting the Inspiration 4 crew. That's next. So SpaceX, it is set to launch the first all-civilian-led crew to orbit Wednesday. And I want to bring in our Bloomberg's own Ed Ludlow, who's at Cape Canaveral for Wednesday's launch. Ed, I mean, just leaving the launch pad where a press conference with the crew is just wrapped up, what is the most important thing to be looking out for right now?
Look, it's amazing how calm these civilian crew are, because simply this is the most important launch so far. This is not suborbital, it is orbital. Jeff Bezos went about 65 miles above the Earth. This crew will go 360 miles above the Earth. And Dragon, the capsule, is designed to be fully autonomous. But in the event that something goes wrong over the course of 3 days, the commander, Jared Isaacman, and the pilot, Cyan Proctor, will have to take over and intervene, especially if they lose communication with SpaceX, which is a real risk here.
I mean, extraordinary photos that we're seeing. See a Kármán line. What are some of the build-up and what anticipation should we look for ahead of the event?
Yeah, look, they have been in intense 5 months of training, extreme G-force training. They've been on fighter jets. They've learned how to use the restroom on board the Dragon capsule for 3 days. They've learned what to do if somebody gets sick. And it is all on them in those kind of emergency scenarios. What we'll be looking for is kind of what we've seen from SpaceX. It's about a 13-minute journey from liftoff to orbit, and it's a very autonomous process. It's completely to the second and calculated. So we'll be looking out for each of those minute markers and hoping that everything goes smoothly.
30 seconds, Ed. Who are they again?
Jared Isaacman, the CEO of Shift4 Payments, he is paid for this entire mission, and he's doing so to raise money for St. Jude. Cyan Proctor, she failed at becoming an astronaut in 2009, now gets her chance. You have Haley Arsenault, who is a cancer survivor and medic at St. Jude. She'll be the officer. And finally, Brian Zabreski, who's just in it for the fun.
Amazing. Ed Ludlow there in Cape Canaveral. We thank you. That does it for this edition of Bloomberg Technology. Make sure you tune in tomorrow because we're going to be joined by the Glassdoor CEO as well as CEO of Voyager Space Holdings. This is Bloomberg.